So a state-owned coal giant is about to go public, and all the headlines are going to scream about its market dominance and how critical it is for the country. But what if the real story, the one that actually matters for your money, is buried deep in the fine print, in the auditor's notes? Okay, let's get into it.
All right, so today we're not just going to skim the surface of the Bharat Coking Coal Limited IPO. No, we're putting on our forensic accountant hats. We're going to focus on the serious red flags being waved by the statutory auditors and even the Comptroller and Auditor General of India. This is the part of the story they really hope you just skip over.
Here's the game plan. First, we'll see who these guys are. Then, we'll look at the bull case, all the good stuff. But then, we pivot to the financials and the auditor's red flags. That's the bad news. We'll wrap it all up with the big risks and a final verdict on who, if anyone, should even think about this IPO.
Okay, first things first. Who exactly is Bharat Coking Coal Limited, or BCCL? Let's get the quick snapshot.
So, in a nutshell, BCCL is a government company part of the massive Coal India. Their whole deal is digging up coking coal, which is basically a super important ingredient needed to make steel. Think of them as the main local supplier for India's entire steel industry. A pretty big deal.
And when I say a big deal, I mean a huge deal. They control almost 60% of the domestic market. They aren't just a player, they are the player. This is pretty close to a monopoly, and honestly, it's their biggest selling point.
Okay, so you see that market share, and you're probably thinking, wow, that's a fortress. So let's build on that. Let's look at why, on the surface, this IPO looks so attractive. This is the bull case.
And the scale here is just staggering. We already know they're the biggest producer, but look at those resources. We're talking about almost 8 billion metric tons of coal reserves. Their mines are in the best possible spots, they have the most infrastructure, and they've got the backing of Coal India. It's what you'd call a massive competitive moat.
All right, so the business model looks like an unbreakable fortress. But a fortress is only as strong as its foundation. And in business, that foundation is the financials. And this is where the story takes a sharp and, frankly, worrying turn. Now, if you just glance at these top-line numbers, everything seems great. Revenue's up, profits up, it all looks like a healthy, growing company. If this is all you looked at, you'd probably think, looks like a solid investment.
But here's the billion-dollar question, isn't it? Are these numbers telling the whole truth? Can we actually trust them? Because what we found, buried deep in the prospectus, suggests that maybe we can't.
And there it is, right there, in black and white. And look, this isn't some market analyst with an axe to grind. This is a direct quote from the CAG, the government's top auditor, and it's in the IPO document itself. They are literally saying that the company is not disclosing things that are essential to understanding the financials. That is a siren going off. So what are they talking about? Well, here's just one example. This giant number is basically a tax refund the company is saying it's owed. The problem? It's been sitting on their books for years, and a rule change makes it very questionable if they'll ever see that money as actual cash. Yet it's still being counted as an asset, making the company look financially stronger than it might be.
And it just keeps going. The auditors found more basic errors that are kind of hard to believe. They got the numbers wrong on bank guarantees, on advances. They even claimed a legal case was at the International Criminal Court when it was actually at the Delhi High Court. I mean, come on. This isn't just about sloppy accounting. It points to a serious lack of oversight.
So you see, these financial mistakes aren't just mistakes. They're symptoms of a much bigger problem. So let's zoom out and talk about the whole structure of this IPO and the questionable governance.
Now, this is probably the single most important thing to understand here. This IPO is a 100% offer for sale. In plain English, that means the company, BCCL, will not see a single rupee of this money. All of it, every last bit, is going to the current owner, the government of India, who is selling off its shares. This isn't about raising money for growth, it's about the promoter cashing out.
And this slide really shows you the two different realities of this company. You have the bull case, market leader, huge reserves, government backing. It looks fantastic. But then there's the bear case, direct warnings from auditors, an IPO that's just an exit, shockingly bad governance with only one independent director, and a massive pile of potential liabilities that could blow up one day.
And the hits keep on coming. Of course, there's regulatory risk. Government policy can change on a dime. There's litigation risk. But the one that really made me do a double take was the insurance risk. They admit right in the prospectus that they have very limited insurance and don't even cover key things like their plants and machinery against all losses. For a heavy-duty mining company, that's just a staggering level of risk to be carrying.
So, after looking at the good, the bad, and the downright ugly, what's the final verdict? Who should actually be thinking about investing in this?
Let's be brutally honest here. If you are an aggressive investor with a stomach for high risk, if you get the weird world of PSUs, and you're making a pure bet that their monopoly will overcome all these other problems, maybe you take a look. But for pretty much everyone else, especially if you're a conservative investor who likes clean books, good management, and companies raising money to grow, you should probably stay far, far away.
So our final verdict is pretty clear. Neutral, and this is one for the risk takers only.
So, to wrap it all up, the company's dominance in its market is undeniable. That's a huge positive, but it's completely overshadowed by the auditor warnings, the weak governance, and the fact this IPO does nothing for the company itself. An investment here isn't really a bet on the business fundamentals. It's a gamble that their monopoly is so powerful it can cover up a whole lot of problems.
And that really is the final question I want to leave you with. Is having a monopoly enough to make you ignore direct warnings from the people whose job it is to check the math? That is the fundamental dilemma you have to solve for yourself with the BCCL IPO.